You got me running, shake it, shake it, shake it, feel that. Raise your hands up, raise them up.
Okay, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call episode 298. So it's the 26th of May now, 11 a.m. Singapore time. So yeah, this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, so first things first, we had the RBNZ monetary policy statement released an hour ago. So I'm going to get Kim Hong here, currency analyst at LCMS Traders, to share a little bit about that. Kim Hong.
Thank you very much, Junwei. Okay, so yep, at 10 a.m. just now, GMT +8. Okay, we see the Reserve Bank of New Zealand, okay, holding interest rate unchanged at 0.25%, okay, while keeping their QE unchanged as well, okay. However, okay, they did drop something, all right. So they actually mentioned that, the global COVID issue situation right now is very good, doing well, and the New Zealand's economy is performing well as well, okay. Now, as a result, they are actually seeing, okay, or to be more specific, they're actually forecasting a hike in interest rate in September 2022. Okay, let me share with you the report. Okay, there you go. Okay, I hope you guys can see the text. Hope it's not so small. Okay, as you guys can see over here, like 2022 September, you see there's a 0.5% OCR. OCR stands for official cash rate, which is actually the technical term for interest rates. Okay, so we can see that there's a 0.5% hike next year, next September, Q3, I would say. So this is actually, if you realize that this is actually way earlier than the other central banks forecast. Okay, like the US, they are not at the moment, they are not seeing a hike in interest rate at least until early 2024, okay, and Canada as well, probably 2023, but we are looking at a 2022 rate hike from the Reserve Bank of New Zealand, okay. Now, this is actually a very, I would say, a very hawkish comment made by, well, not comment, I would say, but a very hawkish forecast by the central bank, okay. Now, as a result, we actually see that, let me unshare this and share my chart. We actually see a strong rise in the New Zealand dollar, okay? So as you can see my chart, this is an hourly chart. Let me just zoom in for, okay. So now, if you can see this candle over here, this super huge bullish candle over here is actually the 10 a.m. candle, all right? And you see that upon the announcement, it actually went up by, well, 50 pips, closing 50 pips, okay? But initially, the move was some 65 pips before settling down at 50 pips, okay? Now, we can see that this is actually a strong appreciation. For traders out there, yes, you may be looking for a buy in the New Zealand dollar right now, that I agree. However, okay, note that I have a red line over here, which is the 0.73 handle, okay? Now, my personal preference, okay, would be to wait for New Zealand dollar to break above this key handle, this 0.73 handle, before looking for a buying opportunity, okay? Yes, we have a very hawkish RBNZ right now, and, economy is looking good and things like that. However, if, okay, the price fails to break above, it may very well just hover at a level for maybe the next few days or so, before new moves comes in. So my suggestion to traders out there is to wait for a clear, okay, above this 0.73 level handle before looking for buying opportunities. All right. Okay, that's all I have for you guys today. So catch up with you guys soon. Back to you, Junwei.
Okay, thanks for that, Kim Hong. A very comprehensive breakdown with charts and everything. Okay, so right now, today is Wednesday. It's the currency call. It's on pound. So let's get Jin here, Jin Dao, from founder of LCMS Traders and $1 million trader trading account with more than US $14 million on a daily basis. All right, Jin, pass to you for the currency call.
Okay, good morning everyone and happy Vesak Day for anyone who is celebrating or observing this day. Today being Wednesday, let's look at the pound dollar. What could happen? Not a lot of things has been happening on the pound dollar after last week. So just sharing with you here the chart on the pound dollar H4 time frame. Last week, you know, as it was that big pound week, we saw a lot of news coming out for the pound dollar, for the pound in particular. We saw that big volatility. It was trading at that or within that 1.4150 level. We saw it spike up, test lower before tracking higher. Came quite close to what we expected. It tracked lower, a bit lower than expected, and didn't get to so much that TP level of 1.4278. Right now, the pound dollar is sitting at the 1.4150 level, and you see that it has been doing that pretty much for this week. Hasn't done too much, spiking a little bit higher before now sitting back at this support level. So it actually looks like it's setting up quite nicely for a potential big move that could be coming up. But what could actually be moving the pound dollar, you know, significantly higher or lower at this point now, looking at the Forex Trading Asia economic calendar, today being Wednesday, you know, we had the RBNZ news that Gimon has just shared with you about. Not much else happening for the rest of the day. Okay, so in this case, I don't think we're going to see too much happening on the pound dollar, but look at Thursday where we do have, despite the MPC members speaking, we do have the US GDP quarter on quarter was 6.4%, expected a 6.5%. So looking at some possible good news coming from the US. Following from that, on Friday, we have some Euro CPI numbers coming out. Not going to do too much, but you want to pay attention to the US again on Friday, the Chicago PMI and the consumer sentiment, possibly going from 82.8 to an 82.9. Slight, very slight good news coming from the US again. Following from that, what I'll actually do is I will show you what could happen next week, right? I normally do this on Friday, but we want to find out what could move the pound dollar. So looking at next week, not too much. This is all Euro and CAD. More Aussie news next week. We have some pound news. Not moving prices. A lot of CAD news. So pay attention to when we talk about the CAD. And okay, there you go. We have some pound news on Wednesday and PMI numbers on Thursday, and then after that, non-farm payrolls for the US. So you can see here, there's not a lot of news coming for the pound dollar. What could move prices at this point will probably be driven by that US dollar strength, slight US dollar strength coming around, or what might actually look like is the good news being priced in and then the US numbers disappointing markets a little bit. So back to the charts here, how it looks like at this point, a pound dollar on the H4 time frame looks like it's going to be quite a good trading opportunity, both for the potential upside or the potential downside move. Similar to what we had 2 weeks ago, where we saw the pound dollar reject the 1.4150 to test the 1.4 flat number that came down before bouncing back up. I do anticipate at this point that we might see it track lower again towards the 1.4 level, right? And those of you who are interested in chart patterns, you can actually see that it might have formed a little bit of a double top pattern before turning back down, or if it rejects this point, we might see a bit of a skewed, not a perfect, but a bit of a skewed head and shoulder, the head over there, slight shoulder, and a skewed shoulder downwards. So if it rejects that 1.4150, look for selling opportunities below 1.412 or below 1.4130. You could be looking at a 40 pip stop loss for a good 100 pip take profit level, 120 pip take profit level towards the downside. So in this case, you'll be looking at a 1:2 or 1:3 risk reward ratios towards the downside for the pound dollar. But this is probably not going to happen too quickly. It's going to take a little bit of time and slowly gravitate downwards. On the other hand, if it doesn't go down, if it sits at this support level and bounce higher, push upwards, I don't think it will break up from that 1.4278. From last week's level, we saw it at 1.4212. So what you could be looking for, and I'll be very cautious to trade it any higher, is above 1.4170. You could be looking at a 30 pip stop loss for a 90 pip take profit level, or even a 60 pip take profit level. So again, pound dollar towards the upside, 30 pip stop, 60 pip take would be a 1:2, or a 90 pip take profit level is a 1:3 risk reward ratio towards the upside. At this point, those of you who are familiar with the straddle strategy, this might be the opportunity that you want to prepare for, as we see the pound dollar sitting in this relatively tight range with that potential break towards the upside or the downside. You know, as we look at the pound dollar, cast your mind back into how the euro pound looks like. The euro pound here on the H4 time frame, we last spoke about it last week when I looked at the pound dollar, saying that at that point we could see it track lower towards the 85, rejecting the 8651 level towards the 8580 support. At this point, you know, I didn't move that red line. It's just gone nicely according to that red line there that we drew last week. Right now, it has broken above 8651. I think that with the potential pound dollar moving up, or with that euro dollar testing the 12261 resistance level again, what you might actually see here is a good support level. A good support level for the euro pound. If the euro dollar continues moving up, we could see it drag the pound dollar higher. And if we do see the pound dollar track lower, that could also push the euro pound towards the upside, in that scenario, towards the high of 3 weeks ago. So you could be looking at a 20 pip stop loss at about 8658 towards that 40 pip take profit level, towards 8700. You're looking at a 1:2 risk reward ratios towards the upside. But be very careful on the euro pound, because the direction on the pound dollar is still in that decision point. The way the pound dollar, whether it goes up, it could pull the euro pound down, or if the pound dollar goes down, it could push the euro pound higher. So wait for that direction, wait for that move on the pound dollar before deciding what to do on the pound dollar and also on the euro pound.
Okay, thanks for that, Jin. Yep, so if you guys are in the free Telegram channel, you guys should receive TP3 on the NZDUSD trade that was issued yesterday. All right, so that's the end of the session today. We'll keep it short and sweet. So yeah, do check out the chat right now. Search for Forex Trading Asia in Spotify for our podcast. Get into our Forex Signals Telegram channel via the link. Subscribe to the YouTube channel, LCM Traders YouTube channel for the daily recordings. If you're interested to get into Traders Club, check out the link too. And if you're looking for a managed account service, you don't have time to trade yourself, do take a look at forexbriefcase.com. So yeah, happy Visa Day, everybody, and see you guys tomorrow for the Yen and Gold. Goodbye. Thank you and goodbye.